Hello students, welcome to the next session of the company law. In the last session we have talked about declaration of dividend and the provisions relating to the dividend types of the dividend in detail. In this particular session we are going to take it further and we'll move on to the next chapter, that is accounts of the company. Okay, so our today's topic will be accounts of companies. Accounts of companies. Okay, so we will talk about various sections today, say from section number 128 onwards to 134 we'll try to cover. So let's get started. So why the accounts of the companies are required? So it is required for disclosing the you can say the annual information to the shareholders, because shareholders should know, okay, what is happening in the company, what is the situation, or you can say the status of the accounts of the company. Okay, so it is a disclosure made to the shareholders by the directors of the company about the working and the financial position of the company, so that the shareholders should be made aware about the affairs of the company, what is going on in the company. So this Companies Act 2013, okay, it lays down various provisions related to the maintenance of the accounts, books of accounts of the company from section number 128 onwards. Okay, so we are going to start with that. So books of account of the company, the provisions relating to it, okay, it is given under section books of accounts of the company. Okay, books of accounts of the company, the provisions relating to it are given under section 128, but the definition of it is defined under section 2 subsection 13, which says that, okay, it includes records maintained in respect of. So what is mean by books of accounts? So first it includes records maintained in respect of. Records maintained in respect of. So which types of records we are talking about? All sums of money received and expended by company. All sums of money received and expended by company. All sales and purchases of goods and services by the company. The assets and liabilities of the company. The items of cost as may be prescribed. Okay, so under the act. So this is the definition of the books of accounts, which says that it includes records maintained in respect of all sums of money received. So it talks about all sums of money which is received or expended by the company. All sales and purchases of the goods and services by the company. So these are nothing but all the records which are supposed to be maintained by the company relating to all sums, all sales and purchases, all assets and liabilities of the company, and the items of the cost which will be okay as per the act as may be prescribed. So this is the definition of the books of account. Another definition which is given under the act is about book and paper, which is given under section 2 subsection 12 of the act, which includes books of account, deeds, vouchers, writings, documents, minutes, and registers maintained on paper or in electronic form. So these two definitions are important to understand. So books of account is very important definition, book and paper, which includes all these factors. So now so I can just mention over here books and accounts or book and paper for your ready reference. Book and paper. Where it is defined under section. What does it include? Books of accounts, then deeds, vouchers, writings, documents, registers, maintained on paper or electronic form. Okay, so these are the two important definitions what we have studied. First is the books of account and second one is the book and paper. We'll take it further now and we'll try to understand the general requirements of the company relating to maintenance of the books of account. So every company shall prepare the books of accounts and other relevant books and records, and even the financial statement, which we are going to talk little later. Okay, every financial year. Now these books of accounts should give the true and fair view of the affairs of the company, including if it is having a branch office of the company, it must be kept on the accrual basis. So books of accounts should be kept in the accrual basis according to the double entry system of accounting. We'll talk about that little later. So let's begin with the section number 128, which talks about place of keeping the books of account. So section number 128, which talks about place of keeping books of accounts. Place of keeping books of account. So every company has to prepare and keep the books of accounts and other relevant books and papers and the financial, okay, and the financial statements at its register office. So it is given very clearly, every company has to prepare and keep the books of accounts books and paper and financial statements, so which we can say FS, where at registered office. Okay, so at register office this book should be kept. So now the question will arise whether they can keep at some other place. So answer is yes, the proviso is given, provided all or any of the books of accounts may be kept at such other place in India as the board of director may decide, where such a decision is taken by the board within 7 days thereof, file with the registrar a notice in writing giving full address and place. So it can be kept at any other place in India as per the direction of the board of directors, as per the decision made by the board of directors. So it can be kept at any other place in India as decided by BOD by giving notice in writing within 7 days to ROC. Okay, so within 7 days notice should be given to ROC and board of directors can decide that it can be kept at any other place in India. Because in most of the cases it happens the corporate office is different and where all the operations are carried on, and for the convenience purpose companies may have to maintain the records of the books of accounts and everything at some other place than register office. So for the convenience purpose this particular proviso has been incorporated under section 128 of the Companies Act. So now the maintenance of the books of account can be in the form of electronic means also. So that is not the problem with the company. So what are the general requirements? Okay, every company should prepare books of accounts and other relevant books. Okay, in which particular format it should be in the accrual basis. Okay, so books of account we can say books of accounts must be kept first on accrual basis and second double entry system of accounting. Double entry system of accounting. Okay, on accrual basis or double entry system of accounting. So what does it mean by accrual basis and double entry system of accounting? So accrual basis of accounting is an accounting assumption or accounting concept which is followed in the preparation of the financial statement. So accrual concept is one of the 4 principles which involves that income and expenditure as they accrue. Okay, recording of income and expenditure as they accrue. So not as they received and paid. Recording income and expenditure as they accrue. Okay, and what about this double entry system of accounting? Okay, it is a method of recording any transaction of a business in a set of accounts in which every transaction has a dual aspect. So you can say every transaction must have a dual aspect of debit and credit. Every transaction has dual aspect of debit and credit. Okay, so it needs to be recorded at least the two accounts double enables, okay, in the credit and the debit system. So now this is the way, okay, it should be maintained. Now we'll proceed further. Now place of accounting we have already seen, where to keep it, at a register office or any other place. Now the rules, corresponding rules given under accounting companies account rules 2014 says that a company can have the option of keeping the books of account or other relevant papers in electronic mode, as we have seen earlier. So such books of accounts can be maintained and which can be remain accessible in India. The information contained in the record shall be retained completely in the format in which they were originally generated. So all those rules, okay, if a company wants to keep it in the electronic form, company will have to comply with the corresponding rules to that effect. So company can very well keep it. So what about the books of accounts of the branch office? So where a company has a branch office in or outside India, it may so happen company having the register office or the corporate office in India, like it may have some office in India or the outside India, that is called as branch office. So it shall be deemed to have complied with the provisions if proper books of account relating to the transaction effected at the branch office are kept at that office and proper summarized returns periodically are sent by the branch office to the company at its register office. So if the records are sent to the register office, it will be complied with. So who can do the inspection of the books of account? Inspection of the books of account can be made, okay, by directors. Any director can inspect the books of account or any books on paper for that matter during business hours. Such inspection may be done by any type of director, independent or promoter or full time. So a person can inspect the books of accounts of the subsidiary only on authorization. So we'll talk about few important pointers over here. So that important points, few additional points. So we'll say few additional points. Few additional points books of accounts. So how the company can comply with that? Books of accounts of branch office we have seen, okay. Then inspection it can be done by any type of director, promoter. Then period of reservation of books of accounts, okay. So how many years, okay, till how many years, okay, one can preserve the books of account? It is given that, okay, it should be maintained for maximum 8 years. Beyond 8 years, if there is any investigation is going on against the company, then the central government may direct, okay. So I would say in the two ways we can understand this particular point. for maximum period. For maximum period of 8 years. Okay. If CG directs, then beyond 8 years. Okay, so if any investigation is going on as per the CG's direction, beyond 8 years also, okay, period of preservation will be required. Who are the persons responsible for books of accounts? Persons responsible to maintain books of accounts. Okay, so who are they? We can just write down like MD, then WTD, that is whole time director of finance, if it is there, then CFO, or any other person, as charged by BOD, that is board of directors. So they will have to comply, okay, the maintenance of these books of accounts. After that comes the penalty part. If company is not maintaining the books of accounts in a proper way, then what will happen? So there can be two types of penalties. So person responsible, I think I should mention in this way. I should say that person fails to take reasonable steps so there can be penalty in two different ways. Imprisonment up to 1 year, fine rupees 50,000 to rupees 5 lakhs. Okay, so these two penalties can be there on person who is responsible to maintain the books of account but is not maintaining it. Okay, so that point of time these penalties can be levied. So I hope the provisions relating to the books of account given under 128 are very clear to you. So you please make a note of all these points very quickly before we'll proceed further. So how to record the income and expenditure and on the accrual basis, and all accounting transaction should be maintained in the double entry system of accounting, in the form of double entry system of accounting. These are some of the few additional points. I hope you have understood the points relating to the books of accounts. Now we will proceed further to understand the next topic under section 129 relating to the financial statements. Financial statement. So financial statement provisions are given under section 129, but before that we need to understand the definition of financial statement. Financial statement definition. Okay, so I'm going to use the short form, that is financial statement definition. Okay, which is defined under section 2 subsection 40 of the act. Okay, so it says that it includes what does it include? First, you can say that balance sheet, profit and loss accounts, cash flow statement, then statement of change in equity, or any explanatory notes. Annex to financial statement. Okay, so this is the definition given under section 2 subsection 40 of the Companies Act. Financial statement means one include balance sheet, profit and loss account, cash flow statement, statement of change in equity, or any other explanatory notes next to the financial statements. But for a one-person company, small company and dormant company, they may not include the cash flow statement. So that is the exception given. So financial statement should be prepared in a financial year. Financial statement should be prepared in a financial year and as per the requirements of the Schedule 3. Okay, so Schedule 3 is dedicated for the financial statement. It should be made in accordance with the provisions given under the Schedule 3. Okay, so we can say that in the on the next page, financial statement should be prepared for financial year and as per the requirements of Schedule 3. As per requirements of Schedule 3. Now we'll try to understand the financial year, okay, definition. financial year definition, okay, which is defined under section 2 subsection 41. Okay, so it's a very simple definition in relation to any company or a body corporate, means period ending, okay, on the 31st day of March every year. So where it has been incorporated on or after 1st of January. So in short, we can make out the definition: period ending March 31st of every year. A company gets incorporated after 1st January, then the period ending on 31st March of the following year. 31st March of the following year. So there is a proviso which is given, okay, which says that, which is an application can be made by a company or a body corporate which is holding or a subsidiary company or associate company or a company incorporated outside India, and which is required to follow a different kind of financial year, because in few other countries, okay, the financial year is January to December, and to make the consolidated financial statements which is to be aligned with the holding or the subsidiary company, that company may have to align their financial statements in accordance with their financial years. So that application can be made by the company, and accordingly, if the application can be made to the tribunal, and if tribunal is satisfied, okay, then it can be allowed. So few additional points, okay, as per section 129, we can, important points of 129 we can say, 129 gives the provisions relating to the financial statement, okay, important points regarding financial statement as per 129, important points as per section 129. Okay, so one by one we'll try to understand. So financial statement gives a true, should give a true and fair view of the state of affairs of the company. Financial statement should comply with accounting standards as may be notified may not apply to insurance, banking, or any other company engage in generation or supply of energy. At every AGM, the board, you can say the BOD directly, no, not a board required. BOD shall such meeting for financial year. Where a company has one or more subsidiaries or associate companies, it shall also prepare consolidated financial statements, that is CFS. The company should disclose in its financial statement, the deviation from accounting standards with reasons. CG may exempt any class or classes of companies from complying with section 129 or rules made thereunder. Okay, So these are some of the important points relating to the financial statement, regarding financial statement as per section 129 of the Act. So financial statement, okay, should give, what is the requirement of the financial statement? Because it should give a true and a fair view of the state of affairs of the company. So it should give a true and a fair view of the state of affairs of the company. You should comply with the accounting standards. We will talk about it. Accounting standards are basically standards which are recommended by Institute of Chartered Accounts of India in consultation with NFRA, okay, National Financial Reporting Authority. 129 may not apply to insurance, banking, or any company engaged in generation or supply of energy. So we have Insurance Act, we have Banking Regulation Act, we have Electricity Act. So those particular acts will be made applicable to such types of companies. At every AGM, the BOD shall lay before such meeting financial statements. Okay. So as we have already seen, that is one of the ordinary business that in every AGM company will have to lay before it, okay, for the approval, for the adoption of the financial statements. Where a company has one or more subsidiaries or associate company, it shall also prepare consolidated financial statement, that is also called as CFS. Okay, so consolidated financial statements are basically the consolidated accountings. Okay, it gives a true and fair view of the consolidated financial statements of everything, the holding of the subsidiary or associate company. So those provisions are also there. Company should disclose in its financial statement a deviation. So if company is deviating from any of the reasons, so with any of the accounting standards, then company will have to disclose in its financial statement why it has deviated from the accounting standards with the reasons therefore. CG may also exempt. CG has the right on its own or on the application made by any company. Okay, CG may exempt any company from section number 129 or rules made thereunder. So these sections and the rules made thereunder won't be applicable to the class or classes of company where the exemption has been granted by the central government. So these are some of the important points of the financial statements. And then last point, of course, it's about the penalty. What will happen, okay, if company will not, okay, do it? So company contravenes any of the provisions. The managing director, WTD in charge of the financials, CFO or any other person charged, okay, so in absence of the officer, all the directors shall be punishable with imprisonment for a term which may extend to 1 year. So I can just mention over here, if company contravenes, then MD, WTD in finance, you can say CFO, then any other person charged by BOD okay, so what will be the penalty? Again, it can be in two different ways. Imprisonment or with fine. Okay, so imprisonment, you can say, or with fine. What will be the imprisonment? So imprisonment up to 1 year or fine not less than 50,000, which makes it into 5 lakhs. Or you can say or with both. Or with both. Okay, so three types of penalties can be there. Okay, so these are the provisions relating to the (129) financial statements. Now the provisions for the reopening of accounts on the, okay, if you want to write down the provisions, quickly write down financial statement. So these are important pointers of 129. Now we'll discuss about reopening of accounts on courts or tribunal orders, on courts or tribunal orders. Okay, so basically an application, okay, to be made, application should be made to the, can be made by some parties, and accordingly an application can be made by whom? First, central government. Second, it can be income tax authorities. Third, SEBI. Statutory regulatory body. And fifth, any other person. Any other person. So an application can be made to the court or tribunal. So on which basis? That earlier accounts prepared are in fraudulent manner, or affairs of the company were mismanaged. For what reasons? So you can say that for first, there can be reason that earlier accounts prepared in fraudulent manner, and second, affairs or of the company, affairs of the company were mismanaged related to accounts. Okay, so for these reasons, okay, an application can be made, then notice can be served to the applicant, then representation, and then tribunal can pass the order with that effect. But the accounts can be reopened only for a period of 8 years. Okay, what is the timeline? Timeline is given, time limit, okay, is only for 8 years, not beyond that. But yes, if the central government is of the opinion that, okay, that it can be opened for further period, then it can be. So this is reopening of the accounts. Then voluntary revision. It may so happen that voluntary revision company wants to make voluntary revision of financial statements or board's report. Okay, so that is given under 131. So who can make it? If it appears to the board of director that financial statements or the board report not in compliance with 129 and section 134, then it can be, okay, on approval and order of tribunal, it can prepare. Okay, so to whom? If it appears to BOD that company, if it appears to the BOD that FS and board report is not in compliance with section 129 and section 120, 134, okay, then it can apply, then on approval by it may prepare revise FS, or it may revise report, or you can say revise board report. Okay, but they have to comply with that. The revised financial statement or report shall not be prepared or filed more than once in a financial year. So reasons of the revision should be disclosed properly in the board report. But it must be confined to the correction in respect of the previous financial year or report, the making of any necessary alterations. Okay, so for that reason only this is, okay, allowed, not for that. Then constitution of the NFRA is given under section 132, constitution of NFRA, that is National Financial Reporting Authority, National financial reporting authority. So who can establish this? Okay, central government. Establish by CG. Okay, so NFRA has been established by CG for matters relating to accounting and auditing standard. For what? For matters relating to accounting and auditing standards. So it is the role of the NFRA that it will comply, it will give the recommendations to the CG on the formulation and laying down this accounting and the auditing standard for the adoption by the companies. It will monitor and enforce the compliances of the accounting and auditing standard. It will oversee the quality of the service of the profession associated with it and perform other functions as may be given by the CG. Not many points we need to discuss about this. Then few provisions. Section 133 says that CG to prescribe accounting standards. Okay, but these accounting standards can be prescribed by the CG, okay, after as recommended by ICAI, that is Institute of Company Chartered Accounts of India, in consultation and examination made by NFRA. Okay, so you need to understand the role of these bodies. And the last provision which talks about section 134, which talks about financial statements and board reports. Okay, so this provision says that the auditor's report is to be attached to every financial statement, a report by the board of directors containing details of the matter specified. So what should be attached along with the financial statement? Auditor's report, plus auditor's report plus board report, including director's responsibility statement, including director's responsibility statement. So it shall be attached with every financial statement laid before the company. And who is duty bound, okay, to sign the board report, and every annexure has to be signed by the, it can be signed by, on behalf of the company, the chairperson, okay, chief executive officer, chief financial officer, or the company secretary who may be appointed for that particular purpose. So board of directors report should give a kind of director responsibility statement. What were the director responsibility? There are some prescribed formats for that. Then committees work or CSR work, what the company has done, then the state of affairs, how many board meetings company has conducted. So it is a kind of information provided by the directors to the shareholders of the company. So it should be properly given. So director responsibility statement basically state in preparation of the annual accounts, the applicable accounting standards have been complied with. Directors had selected such accounting policies and applied them consistently. They have taken proper and sufficient care for the maintenance of adequate accounting records and everything. They have prepared annual accounts on a going concern. So all these particular director's responsibility statements should be properly mentioned by the company. So I hope you have understood all the provisions relating to the accounting part, or you can say our today's topic, accounts of the company. So we have covered from section number 128 to 134, out of which 128, 129 are very important. So that's it from my end today. Do watch this video, read the notes carefully. Thank you so much. We'll come up with a new topic in the next session. Till then, goodbye.